Welcome back. You're still tuned into Inside Out on CNBC-TV18. This is our Swotlight segment. And on our Swotlight today, we have Syrma SGS Technology, which was recently listed in August 2022 with 19% listing gains. And currently, the stock is up just 5% versus the listing price. The IPO size was 840 crore rupees, out of which 760 crore rupees was the fresh issue and rest is offer for sale by the promoters. It is one of the leading PCBA manufacturers in India. This is the process which ensures a completed board where all the necessary electronic components are connected with each other. So 76% of the total revenues, they come in from PCBA, around 22% from RFID and 2% from magnetics. 35% of their revenues come in from industrial, 13% from healthcare, 20% from consumer, 20% from automotive, 2% from railways. There is IT as well, there they get around 10% revenues coming in from. In the automotive segment, they are seeing higher traction from the CV segment. Company has clients like Eureka Forbes, Tata Power Europe, TVS, HUL to name a few. Let's talk some numbers now. The revenue growth saw a sharp increase in FY22, which is on a YOY basis. The expectation is, yes, that the growth will slow down, but company will keep growing. 9-month revenues, EBITDA and profit for the company are already higher than FY22 numbers. The company has an order book of 2100 crore rupees as on December. Now, higher part of these revenues come in from domestic markets and 46% come in from exports. 27% of revenues come from the company being an original design manufacturer and rest from the company being an original equipment manufacturer. If we talk about the segmental performance, some of the segments did see a slowdown in Q3, largely led by weakness in exports. So while autos and consumer segments, they grew, healthcare saw a sharp decline of around 82%, industrials was down 9% and IT and railways by 33%. So where will the growth come from? Capacity expansion plans. 70% of the proceeds will be used there and that is around 550 crore rupees. Company has 21 SMT lines currently. They plan to double it by FY24 end. They newly commissioned facilities in Manesar and Chennai and they also will be setting up Hyderabad unit. So company has around 13 facilities in place right now. The capacity utilization from the new facilities will be around 80 to 85% in near term. The company currently has 560 crore cash in the books. In terms of supply chain, 30 to 40% of sourcing for the company is local and 50% of sourcing is in form of imports from China. In fact, 61.5% of costs in FY22 was towards imports. So more exposure towards imports is a challenge. Company also sees headwinds in terms of slowdown in export markets and segments like healthcare. Working capital for the company also increased to more than 90 days. This was in the last quarter and led by higher inventory. But company is working on it to reduce it to less than 70 days in next 2 to 3 quarters. It also has subsidiaries in other countries like the USA. It has also made some acquisitions in those areas. Now let's wrap it up with shareholding pattern and valuations. Promoters hold 47.27% stake in the company. In the public shareholdings, we have ICICI Prudential FlexiCap Fund, which has 1% stake. We have Franklin at 1.5%. AIFs hold 3.35% stake and FPIs also hold 5% stake in the company. In terms of valuations, the stock trades at 29.5 times 1-year forward earnings, which is at par with the industry average. And with that, we have completely run out of time on this episode of Inside Out. Thanks a lot for tuning in. It's a goodbye from Nigel and I. But do write to us and tell us the companies you want us to discuss and you want to hear about. And we'll feature these on our show. Thanks a lot.